What's up, everybody? Welcome back to Trades and Gains. And this is going to be episode one of a new series we're going to start called the Traderlink Masterclass, where we take complicated market data and turn it into something your cousin who only trades by 0 days can finally understand. And today we're going to start with one of the most misunderstood but powerful modules inside Traderlink, DDOI, aka the Dealer Directional Open Interest. Or as I like to call it, where are the market makers exactly sweating and what price levels? So here's the deal. Dealers are almost always hedging something. They're short calls, they're short puts, they're long something, they're selling something. They're like a casino that hates risk but still wants your money. And DDOI shows us exactly where that dealer exposure is across the strike chain. So think about it like this. These green bars here, when you see green bars, this means dealers are short calls. And those red bars, this means dealers are going to be short puts. When dealers are short calls, they have to buy as price goes up. When dealers are short puts, they have to sell as price goes down. That's why DDOI matters. It tells you where forced buying or forced selling is happening in real time. Now, let's go ahead and walk through our SPX example because that is the main thing that we show on DDOI over at Traderlink. And this is going to be based on November 28th, 2025 data. You're looking at a strike range from the low end of 5,480 all the way up to the top end of 7,330. And the SPX spot price, which we can see, which is represented up here, is at about 68.4909. And immediately we see something important. Below the spot price, so under 6,800, we're seeing a sea of red beginning to accumulate, right? Now, these red bars, those are dealer put exposures. And some of these spikes, well, they're enormous. Like when we go and look down at 6,000, another one that would be enormous would be at 5,750. Another one's all the way down at 6,200. We have some more at 6,300, right here at 6,400. You kind of get the point. I mean, even at 6,780, 6,775. 6,750. You get the point, right? And you've got monster red spikes. Again, we've already gone over those. And this whole region is basically if SPX falls here, dealers are forced to sell, and you're going to want to just pray for volatility. Now, above the spot, we're seeing green skyscrapers being built, even some at those lower levels. But at anything above 6,800, we're starting to see those Hulk hammers, as we like to call them. Now, between 6,850 and 7,000, and we have unhinged bars, like right here at 7,000, that are just sitting. That means dealers are short calls, which means if SPX rises, they must buy futures to hedge. This is how melt-ups happen, not because of euphoria, but, well, because dealers are forced to buy. So what does this tell us about the market on that day? Well, SPX was sitting inside a bullish convexity pocket. Upside movement, which causes forced dealer buying, which causes, well, a melt up. Downside movement, which causes thin air, which is potential for acceleration. Below 6,000 is an absolute puke zone. It's like standing on a hill with a trampoline behind you and a cliff in front of you. Dealer hedging flows are the trampoline in this case. Now, this module is insanely powerful when you're building strategies because it shows where the dealer flows will amplify price. Here's the rule. If spot is sitting on a green cluster, the upside is going to be easier to achieve. If spot is sitting on a red cluster, well, the downside is easier to achieve, right? And if spot is in between, that's where volatility is going to explode, aka where we could see some of those chop days. DDOI basically maps out where the market is stable and, well, where it can rip. DDOI won't tell you direction. For the record, it is a mouthful to say, but it will tell you how strong the move will be. This is why we're starting the entire series with this module, because once you understand dealer flows, everything else inside Traderlink starts to make sense. Next episode, we can go over footprint charts where we decode buying pressure, trapped traders, and the secrets inside every candle. Make sure you like, subscribe, and drop your questions below so we can build this series exactly the way you need it so you can get the most out of it. And if you're new, welcome to the chaos. I'm Max Pitts, host of Trades and Gains, and one of the analysts in Traderlink now. Have a great day.